Got with us Hemant Sikka, who is the President Farm Equipment Sector of M&M, joining us on the show. Thank you so much for being with us. To begin with, given that FY23 so far has been a record year for the tractor industry, you've registered double-digit growth. What's in store for FY24? Because the IMD has given their projections. We know what's in store when it comes to the election year. So what is it that you're penciling in?
So as you rightly said, FY23 has been a record year for the industry. The industry has clocked tremendous volume of 9,45,000. And just to share with you, just about 4 years back, this volume was 7,10,000 odd numbers for the industry. So in the last 4 years, the industry has grown from almost like 7,10,000 to 945, which is kind of growth of more than 33%. So the industry has been on steroids. Last year was very successful year, and we are all very happy about it. Coming to El Nino, as you have seen in the last couple of days, IMD has come up with a near normal monsoon guidance for El Nino, which is again a very positive sign for the industry to go forward. Having said that, I just want to also share with your channel that El Nino correlation with the growth in the tractor industry is not very strong. In the last 25 years, we have had 5 cases of El Nino years, but only in 2 cases out of those 5 years did we have a tractor industry degrowth, which was in the year 2002 and 2015. Whereas in the year 2004 and 2009, when it was a strong El Nino, the tractor industry actually grew very well. And in the 5th year, it was a neutral for the industry. Industry didn't grow or degrow anyways. So out of the 5 instances of El Nino in the last 25 years, only 2 had a tractor industry degrowth. So El Nino correlation with tractor industry degrowth is not very strong. Having said that, El Nino is a weather pattern, and since it is a weather pattern, at some point of time El Nino has to happen. But looking at the industry performance last year and all other factors which we will talk about, I'm very clear that if El Nino was to happen, I think this is the best year for Indian tractor industry that El Nino happens this year. So we are all prepared for it, and I think the industry will hold very well with this.
Right. Hemant, you've also announced the new brand for tractors, right? Oja. With this launch, how is it that one should expect the market share gain when we are seeing increased competition as well in this particular segment?
So in FY23, we have done very well in terms of a market share. Last year, we grew our market share by 1.2 percentage points, and our market share now stands way above 41%. Our market share closer for FY23 was closer to 41.2%, which is kind of our best ever market share that we have had. So with this, we believe that we are on a very strong footing, and with the new range of tractors, which we have just announced a brand called Mahindra Oja, which is a new series of tractors. We don't play in this segment so far, and this will all be incremental volume for us. These are lightweight tractors. 4 different platforms will be launched in 40 different variants all over the country and in other countries like USA, Southeast Asia, and in Japan. This is going to be a simultaneously global launch sometime in the 2nd quarter, and we believe that this will further help us gain strength on our market share. So we already are sitting on a very good market share, but we believe because in the segments of lightweight tractors we were not participating, and this new range of tractors Mahindra Oja will help us participate in those markets and do well. So all this will help us further grow our market share in FY24.
You used margins. You used to enjoy margins over 20%, but in FY23 your margins have been under pressure. Do you think in FY24 you can crawl back up?
So 2.5 years back, we all know that commodity prices were on an unprecedented increase, never seen before this kind of increase. And obviously this was putting a lot of input cost pressure on every manufacturer. And since we consume a lot of commodities directly, it was also putting pressure on our margins. Having said that, we actually did a very smart strategy of passing on these margins, not in 1 or 2 goes, but over several small stages. So every year in the last 2.5 years, we have taken 3 to 4 price increases. These price increases have got very well established in the market, and the farmers have been able to absorb this kind of price increases. And as a result, you have seen in the last 2 to 3 quarters, our margins have started to come back very strongly. I believe that with the kind of work that we are doing in terms of our own value engineering and the cost control that we have been able to establish, and the commodities looking like remaining stable, our margins should hold very well. I won't be able to give any guidance on margins because we have still not announced our last quarter results. So I can't say anything more on this.
You increased your stake in Swaraj Engines. So how are you, getting benefited by these synergies? How is it going to help your margin profile?
So Swaraj Engine, was supplying and continues to supply all the engines to Swaraj tractors on a 100% basis. So this is like a captive plant, which was a separate company, which continues to be a separate company and supplying as a single customer to Swaraj tractors. So we have bought a stake with other partners, and now our stake has gone up, and we believe that this is a very strong company and it will continue to do very in terms of cost economics, economies of scale. It plays like any other business for us. And as the commodities cool off, the margins naturally tend to be better. So we are trying to make sure that as we increase capacity in Swaraj, as I told you that we are establishing a new plant for Swaraj also near Mohali. So obviously all those incremental volumes also go to Swaraj engines.
Right. Hemant, also, can we see you merging Swaraj Engine into the mother company? And is that a part of the long-term plan at all?
I won't be able to comment on that.
Okay. Now that we are seeing the performance of your international subsidiaries getting better, tell us what's the plan regarding exports? How much contribution do you plan to get from there?
So we are very excited about our new series of tractors called Mahindra Oja. Last week we have announced the brand, and right now we are at the last stages of our product quality checks and getting our processes ready in our various plants. Overall, I believe that the product has come out very well. It is a new series of tractors, lightweight series, where we currently do not participate. So all of this will help us gain a market share for us. We believe that in the next few months, the production will start, and sometime in the later part of the second quarter, we should be able to launch this product. We have not decided on the exact date, but as we decide, we will let you know. The product has come out very well. It has got huge potential in the country, and we believe that the product will also do very well in the markets of USA, Japan, and Southeast Asian countries. Plus, there are other markets that we are exploring, which will further add to our volume. So we believe that on the back of Mahindra Oja, the export performance from India will also improve for us.
Now, so if we see farm implementations business today, the industry is about 1.5 times that of the tractor industry. But in India, 10 to 20%. Why is that? I mean, why is that the farm equipment industry so small?
So last year was very good for us in farm machinery. We had gone publicly and stated that this is a growth area for us. Happy to share with you that last year we grew farm machinery business by 40%. And this is on the back of some excellent products that we have launched. We have gained market shares in various segments, and we have also improved our supply chain. Going forward in FY24, we continue to do all the good work that we have done in the last year, plus launch a couple of more products in various quarters as we go ahead. And this will again help us gain market share and enter into categories where we currently do not participate. So on the back of 40% growth in FY23, I expect that we will have similar or even better growth in FY24 in the farm machinery business.
All right, and given the fact that you're expanding your product range, you're setting up a new plant, tell us a little bit more about the company's Capex plans.
So generally we don't share year by Capex plan, but we have shared our 3-year cycle Capex plan. So in the current 3-year cycle which is running, we are planning to expand on our capacity in various plants, plus setting up an all new plant for Swaraj tractors near Mohali, plus the new series of tractors called Mahindra Oja, and there are other platforms which are getting developed. So for our total expense of capacity augmentation, getting up a new plant ready and getting all our new products ready, in the 3-year cycle, we are expecting to spend about 3,000 crores on the Capex.
Good to have you on board. Thanks much for taking time out and joining in and giving us a take on how business is shaping up for you.